Well, today Apple's earnings comes out, so welcome to another episode of Midday Parlay. If you want to know what the VectorVest system has to say about Apple and what to expect from earnings, you sit right there. Hey everybody, Glenn Tompkins, Senior Instructor here at VectorVest. Always love bringing these videos out to you, well, especially a stock as big as Apple's coming out with earnings at the close of business today. What should you expect? Well, I'm going to take you down the road to show you what to look for and how good or bad the Apple stock is. So without further ado, let's get right into the software, actually get into my news story. So the first thing I want to do is get some statistics behind Apple. So Apple statistics as of 2021, this was released earlier in June. And I said, okay, fine, let me go down the list and some Apple key statistics here. Apple generated $274 billion in revenue in 2020, which was 50% came from iPhone sales. Apple's service divisions was the second largest segment, responsible for 19% of the company's revenue in 2021. Apple sold 194 million iPhones, 71 million iPads, and 20 million Mac and MacBook units in 2020. So I looked at that and I said, all right, well, that was 2020, but they reported earlier this year for Q1, right? So let me go look at that. Apple revenue, 2006 to 2021. But the biggest thing here, Apple revenue for the quarter ending March 31st of this year, 2021, was 89.584 billion. That was a 53.63% increase year over year. That's a big number. Apple revenue for the 12 months ending March 31st, so that was for the quarter, and for the 12 months year over year was 325 billion, which was a 21% increase year over year. That's a lot of money that Apple makes. So I wanted to get some statistics, and then I said to myself, well, who's investing in Apple? Is it the younger generation who's all caught up, for the most part, in meme stocks, trying to make a lot of money real quick? And there's a whole long story behind those meme stocks. We won't get into it right now. Or who else is investing in Apple, and what is their goal? So by way of this little piece of information that I got from TipRanks, Apple Investor Analysis, under 35. Last 30 days, it's dropped as far as how many people hold it. 23% of people under 35 own Apple. This is where the crux of the Apple holders are, between the ages of 35 and 55. Where do you sit? Interesting, right? 1.8, a lot more people popping up before earnings comes out. Almost 2% increase in shares owned over the last 30 days. 48% of Apple holders are in the group, the age group between 35 and 55. Wow. Now, for the people who are a little bit more older, over 55, 28% of them hold Apple as well. They increased their shares by 1.2% over the last 30 days. So the people who are younger in generation are still looking for the big pop stocks, and not for Apple, who's out there for the longer term. And now you see where that sits. I'm interested to know, again, where you sit. So now let's get into the software and let's go analyze Apple. Let's go put that into... Where's my mouse? There we go. Let's go take a look at Apple. This is Apple in a nutshell. VectorVest does an excellent job of analyzing stocks for value, safety, and timing to give you a better understanding on what to do with any stock in our database. Apple is traded on the over-the-counter, NASDAQ. It is optionable, which is very important. It is optionable, trading at 149 with an intrinsic value from the VectorVest system at 134, so it's slightly overvalued. Now, let's go look at our indicators, which makes VectorVest what we are. Relative value looks at a stock's long-term upside potential as compared to a AAA corporate bond. We're using that AAA corporate bond as a means of tracking the market. When you buy a bond, you get your money back after it matures with a small interest rates. Can you outperform that? Well, it's on the scale between 0 and 2 at 1.46. It says that Apple should outperform that AAA corporate bond by 46% over the next 1 to 3 years? Relative safety. It's an indicator of risk. How risky is this stock? Relative safety looks at a company's ability to meet or exceed its earnings expectations. Oh, what is that? Earnings. So Apple has a very high probability of meeting or exceeding its earnings expectations. Now, a stock can beat earnings and still go down in price. Why? Because of forward guidance. I don't have an indicator talking about forward guidance, but I may have some information to talk to you about in a minute about the forward guidance. And relative timing is an indicator of the short-term price trend. Is the stock in an uptrend or not? Relative timing above the value of 1 tells me that Apple is in an uptrend. And our overall master indicator, VST, tells me that overall, out of the over 8,800 stocks that we track, that Apple is a great stock. Now, I'm going to talk about some other things behind Apple. If I'm in a stock, I'd like to have a stock that pays a dividend. Well, Apple pays a dividend of 88 cents. Not only that, we analyze dividend analysis or dividend information. Dividend yield at 0.59. Well, that's not a lot, but it is a dividend yield nonetheless. Now, when we look at dividends, we also put a safety on dividends on a scale between 0 and 99. Apple's got a dividend safety of 90, which means that it's got a high probability of either maintaining or growing its dividends. And its dividend growth right now is at 13%. So overall, this is a great stock. I like to call this the bee's knees, whatever you want to call it. This is an outstanding stock for the long term that pays a dividend. Now, the other side of it is I mentioned that it's optionable. Apple has got such a strong move as far as being such a great stock, $2 trillion on hand. They got a lot of money and they put out a lot of great product. If the stock ever goes down and you never want to get rid of it because you like the upside potential, you can always play an option on Apple as well. So, if the stock goes down, you can always buy a put or something along those lines. Let's now take a look at the graph. We're going to right click. We're going to go to view the stock graph. And from the stock graph, wow, that's it in a nutshell, folks. What more do I need to say? Look at that move on Apple. All right, from the bottom left to the top right, a little bit of a pullback here. And you see, we're getting ready to go into earnings today after the market closes. Look at where it's at. It's at the 3-month high right now, which is sitting at $150. We're trading right now, and this is yesterday. When you watch this video, it's going to be yesterday. I'm preparing you for the close of business today, which will be the 27th. But look at that stock's price right at that level of resistance. Now, I want to show you something else. The last earnings report that came out in April, let me go put earnings on. The last earnings report that came out in April, I want to show you. Look at what was going on. Look at the price action of the stock prior to that earnings statement, right? Stock's price was channeling a little bit. It fell. The 3 and the 8 fell. I like using the 3 and 8 exponential moving average, whether I'm a long-term or short-term trader on the stock. But Apple is such a strong stock. It pulled back to a level of support, sitting at about 122. And what did it do? It stayed there, and look at that ramp back up. The 3 and the 8 got you back in. Look at that run. 3 days it fell. The 3 stayed above the 8 even through all that time. And right now, coming into earnings, we're right at that level of resistance. Look at the earnings per share. Look at the earnings growth. These are the things, the engine behind a stock's price move. Now, let's talk a little bit about what happened back here. Now, I've got some forward guidance possibility. What will Apple say about the next iPhone earnings? Where is that? Right there. The next iPhone earnings at earnings time may be more than usual. So what the story starts to tell me is that for the past few quarters, they haven't really given a lot of forward guidance. And I think the market doesn't like that, or investors don't like that. But now coming into this time period for this earnings statement coming into the end of September, what happens then? People go back to school. They're going to need iPads. They're going to need MacBooks. And I think the wearables along the lines will pick up coming into the Christmas season. But I think that right now, coming into the September time period, we're going to need iPads. We're going to need MacBooks. So typically the most important tidbit coming out of a fiscal third quarter earnings, which Apple is scheduled for today, is the company's outlook commentary around its September quarter revenue, which can hold clues to what the company expects early in the days of its next smartphone launch. This is also a time when the new iPhone is going to come out, the iPhone 13, in this upcoming July to September time period. July, August, September. Yeah, in this July to September time period. And so the forward guidance could definitely be on a positive note because of that, because people are going back to school. They're going to need the iPads. They're going to need the MacBooks. And then the release of the newest and greatest iPhone. We expect the timing of the iPhone 13 availability will ultimately prove to be the swing factor in the fiscal fourth quarter. Thus, we anticipate the company will provide more granular direction commentary, wrote Monis Crispy Hart on who that person is. All right, so that's what I think is going to happen. I think that the on revenue, they're going to beat, and I think on forward guidance, they're going to have some good information, and that's my opinion. Now, the thing is, we don't have an indicator for forward guidance, so I'm giving you these tidbits of information to see if Apple does come through with the announcement of the new iPhone 13, when that's going to come out, and especially ramping up for school. So, well, there you go. And by this time you get the video, you'll be prepared to know what to do when the market closes. And if you own it and whatever comes out and they don't, and the market doesn't like it, you can always buy puts, but you need to break through that level of support that I showed you, that big trend line. You need to break below that before you become defensive, and look for the 3 and the 8 to go negative. All right. So there you go. Folks, this video is over. And until the next time I see you, see ya.